and what it means for the stock as well. Mangalam.
Well, more of the same for the FMCG space, and Dabur, as we speak, is currently at the low point of trade because the street was hoping for some sort of green shoots this time around. It's not come by. The company said that demand trends remain sluggish during the quarter, even though the gap between the growth in urban and rural is narrowing. So that means over the next couple of quarters, with better monsoon and better, sowing, crop sowing, etc., we may see rural demand pick up, but that too has been postponed up until the elections and the monsoon season itself. Consolidated revenue for the company is expected to register mid-single-digit growth during the fourth quarter. And remember, this is also the quarter where the Badshah acquisition is in the base, so that may not, add further to their overall revenues that we've seen to the tune of about 2–2.5% the first 9 months of this year itself. They do expect consumption to pick up in the coming months, and in their performance itself, it's the home and personal care segment which has grown in high single digits. There were weaknesses in both the healthcare and F&B segments. Healthcare because of delayed winter, F&B largely because of a high base, so they will register low single-digit growth. What's doing well for them, however, is, and perhaps the entire FMCG space, is that the raw material prices have continued to stay range-bound and lower, so there would be gross margin expansion. The company would see operating margin expansion. Let's see whether that translates into bottom line or not, given a lot of the one-offs. For the non-India part of the company, which is roughly a quarter of their revenues, there would be currency depreciation that would impact the reported numbers in their international business. So let's see how that comes about as well. But for now, no further improvement or visible improvement in consumer sentiment has led the Dabur stock lower.
Thank you so much for that, Mangalam.